Okay, I think we're all good to go. Thank you again very much for attending today's webinar. As I said, potentially a big week in markets. We've got the UK election, we've got the ECB meeting, we've got Director Comey speaking in front of the FBI. There's multiple things going on here. So hope some big moves in the market, some big trading opportunities. Hope by this point you've read the risk warning on the screen, so I'm going to move on past that, and as we normally do here, just highlight some of the big events going on, and then obviously discuss the price action and what could potentially unfold as a result of some of these events. So we're all familiar, I think, with the big themes at this point. Some of those big themes very much coming into focus this week. Obviously, you can see by the categories under this week that Thursday, quite a big deal. So there's a potential that actually we see a bit of a slow build up to the week. But we've already seen the FTSE coming off quite a lot today, and we've seen the pound gaining a bit in value from the latest polls. But clearly it's going to be a bit of a wait and see before these three big events on Thursday. Market reaction, we should see that, we could get the result, the exit polls, obviously, they're going to be coming in thick and fast in around 10 o'clock when voting ends. We could pretty much know the result by 11. That's entirely possible, especially if it's a landslide. But I think in and around midnight we're going to have a pretty solid reaction in the currency markets in the pound. And obviously the big stock market reaction will be it'll be Friday morning once the market opens. So really, to capture the bulk of the stock market reaction, you're going to need to be placing the trades on the Thursday, in expectation of the result. Bit of info about what's happened today is that the service sector slowed. That's interesting because actually construction and manufacturing improved in May, so it's almost a bit of a you could argue perhaps Brexit shifted the economy where inflation's hitting consumer-based services, whereas obviously the lower pound is actually helping manufacturers, and the housing market's still doing all right. As I mentioned, the polls, the pound's higher today because there was the latest poll by ICM, I think. There's going to be so many of them, it's going to be hard to keep track. But the latest poll showed a gap of 11 points. That's the biggest we've seen in a while. Who knows if the terror attacks played a part? I think it's fair to say that Jeremy Corbyn generally perceived as weak on security. We just had 2 terror attacks in the lead up to the election. That's probably not going to particularly help his chances. Obviously, it's it's a tough one to call, but that does seem to have been a factor, because obviously on purely politics alone, Corbyn has been closing the gap with Theresa May. Tories been making a series of gaffes, policy missteps, a bit of backpedaling going on, whereas Jeremy Corbyn has actually come across, a bit less extreme perhaps, quite well in the lead up. So if it sticks around this 11 points, then that indicates Theresa May adding to her majority and kind of what markets were initially expecting. But as I said, over the weekend we saw one poll which was as low as 1 point gap. So it's again a matter of, in a way the polls are good because they're all over the place. So at some point in time, depending on how wrong the polls are getting it, that provides an opportunity for you to get in on what's actually the most likely result, common sense wise. Oil prices were higher today. They're well off the lows, but that really happened on Friday because there's a bit of a diplomatic spat between 4 Arab nations led by Saudi Arabia coming against Qatar. Qatar's siding a bit with Iran. So there's always those kind of tensions going on in the Middle East. At the moment, the market's reacting in terms of it could disrupt supply in the oil market, straight off Hormuz and all of that. But to my mind, actually, the bigger likelihood seems like a disruption of the OPEC deal, which Qatar is a part of, and that would actually be leading oil prices lower, which has been the trend more recently. We'll look at the charts for Brent particularly because there's some interesting patterns there. Last but not least, non-farm payrolls on Friday was pretty poor. It was 138,000, which is, it's not. It was just a lot worse than expected, and expectations had been built up because the ADP report just the day before was actually quite a good one, and so there was just obviously a big shift between ADP and NFP, and so markets got caught off guard a little bit. The dollar's been heading low, and gold's been doing well as a result. Now, leave that towards the end. As I said, any questions? Certainly feel free to let me know here. Let me pull out that question. Right. Let me know if those charts aren't clear enough. I'm using the white backdrop, so I'm hoping that's a bit clearer. I've got a few horizontal lines in a kind of default purple. I kind of like that default because it's quite light, so you don't get too distracted, but you're aware where the levels are. That may actually not be so great for webinar purposes. Let me know. Seems like most people saying that they think there's going to be a narrow win with the Tories, so obviously that's a bit more fitting with the polls. Obviously, it's to start with, we were expecting a landslide, so people saying they can't see any charts, only the logo. Is that still the case? You can only see the logo, right? Or you can see charts. No chart. Oh. Right. Let me see. Have I somehow... Oh, it looks like... Hold on. Shh. I don't even know. I think that was when I was messing around with the... Okay, there we go. So I suppose you only saw the logo the whole time and you didn't see any of the points I had on the PowerPoint. So there we go. There's that. Apologies for that. I think that's when I tried to get clever with the poll. Yeah, probably need to plan that ahead next time. But yeah, just a summary of some of the things I was talking about before. Thank you for letting me know about that. So jumping back to the charts. So got sterling up here first, just because, as I said, we've seen a bit of a bounce back up here in sterling. We're pushing above that 129 mark. As you can see, I mean, that's the general deal here. We broke through. Generally it's always the round numbers that we're reacting from. Obviously we get pushes above and beyond, but that's where the big money comes in and out of the market at the round numbers. So we got through 128. That's when the kind of real breakout, really took place in the wake of the announcement of the election, etc. But it's been a bit of a slow, bumpy ride up to 130, and we just never really made much progress beyond that. Now we're back down to 128 again. What's interesting here is that we've had 2 inside days in a row. This is a Sunday, so I wouldn't put as much as weight on that, but these 2 indecision doji-like candlesticks, 2 inside bars inside this, which is also a bit symptomatic of some indecision here because we came well off the lows, but we finished off the highs too. A break either side of this last doji, which we're obviously seeing a topside break at the moment, can be quite a reliable pattern. So if we finish the day like we are now, that to me looks like good chances we push up to 130 again. What can happen though, and what can be a good setup in itself, is that we get a false break one way of the inside day, and then we end up rolling over the other way. That's so we're kind of, and as you can see, we're caught between these 2 daily moving averages at the moment. We bounced off the 50, but we're being capped by the 20. If you look at something, there's not a perfect kind of bounce off here, but you can see that clearly we lost some, lost some trend strength here with this big drop. And what we're potentially doing at the moment is retesting the underside of this broken trend line and the 20-day moving average. And this is certainly potentially an area that we roll over from. So we're pushing into resistance right now. So as I said, if this resistance holds and we get a false false break at the inside day, that in itself could be a quite good bearish setup to the downside. And you know, if we do take out 128, because of the strength of this candle, I don't really see too much in the way of support before down to 126. I mean, these peaks through here certainly, but you know, I think that, you know, that's this trend giving up the ghost a bit, and I could see us dropping down to 126. You know, that would obviously be more like a very thin Tory majority type scenario probably to get us down there, or a Labour win. I think it's fair to say a Labour win would be sterling negative. I mean, that's the way the market's been reacting to all the polls. As Labour do better, the pound drops. As the Tories do better, the pound rises. So I think that's a fair assumption. Obviously, the next level of that is how long does it last? I don't necessarily think it lasts that long. I mean, when it comes to Brexit, which is the big driving question for the pound and the economy at the moment, are Labour going to do anything much different to the Tories realistically? Obviously they criticise the Tory strategy, but what realistically can be done differently? I think the only thing that would really be, I almost think that a thin Tory majority, which perhaps lessens Theresa May's hand at the negotiating table, would almost be worse than a strong Labour victory, because I really don't think the tactics that they would have would differ too much. Maybe the way they project them in the public sphere, but realistically, you know, there's still the key areas of the economy, and it's all the apparatus behind the scenes is still the civil service. You know, they're still going to be advising in very much the same way whoever's in power when it comes to Brexit. Hence, I don't think the pound really heads that much lower, even in a very worst case election result scenario. Oh, we've got a bit of flashing in the pound. Let me try and readjust. Let me try and readjust that. Maybe I can, if I just go turn it off for a sec. How's that looking? Is that any better? So obviously we're getting a pump higher in the pound today. Worth then taking a look at the FTSE, where you can see correspondingly we're getting a drop. I'll get back to that in more detail in a minute. Stick with the currencies for now. You know, in my mind, the euro is still very much in an uptrend, but obviously we're coming up to this US election high, which is pretty much bang on 113. That's quite strong resistance. So there hasn't been any particular obvious signs of a reversal yet. To me, the fact that we closed above those highs, even though it's marginal, is a positive sign. Obviously, we're pulling back from now, but no real signs of a topping pattern for me. You know, I think probably anywhere up in above 111.50 is still an opportunity for the market to push higher. But you know, this trend can't. The thing is, we got to pull back to the mean down here, and that seemed to be enough to drive the market up. So, you know, I'm really viewing any of these pullbacks as a decent opportunity in the euro. But there's just no, you know, this was a bullish engulfing pattern that took us into new high territory. So theoretically, even anything within that candle pattern potentially is an area where the market could push higher from again. You know, we're sitting about a 50%. You know, if we drop down to the 1 hour time frame, for example, if you call that the engulfing candle, yeah, we're obviously right in and around the 61.8% pullback at this point of that surge higher. So, you know, obviously if we drop through those lows, you know, that kind of nullifies the outlook. But you know, if we get down through here again, then obviously the trend seems to have turned materially. But at the moment, you know, I'm still looking at that daily chart and not really seeing any particular evidence that we're failing to move higher. As I said, we didn't get a kind of spike up through here and close the lower margin significantly below that level. In fact, we closed right up at the highs of the day. So still looks all right for the euro to me. Dollar yen potentially interesting here. I've been saying about how the trend is a bit hard to gauge. How's the flashing at this point? Not. I think it's. Hopefully, it's watchable. Okay, good. I'll have to look into that. The way I'm looking at this, so I had this level on the chart. Obviously, it's that peak there. It's these lows here. It's also basically the 112 mark, and the market made that dramatic move lower. Basically, came up and found resistance at that decent level, and rolled over, and then naturally finding a little bit of support here at the lows. But to me, again, obviously the euro had that bullish engulfing pattern. Here the dollar yen has had a bearish engulfing pattern. So it's good when you get a confirmation in terms of the dollar with these major currency pairs. So the bearish engulfing in the dollar yen indicates weakness in the dollar. The bullish engulfing the euro obviously indicates weakness in the dollar too. So where does that come from? Obviously that weak NFP result. A June rate hike is still on the table in my mind, but if the economy continues looking this soggy, the US economy that is, then we're looking a lot less likely for September, and potentially even less likely with the Fed acting on their shrinking their balance sheet. So again, I think maybe if we could get a bounce up into the kind of 111 territory, that would potentially be an opportunity, because that would be that kind of 50%, 61% retracement. Equally, if depends on your style. Obviously, if you get a breakdown through the low, obviously it could be a false break, but after that pattern, and given the kind of general setup that we're seeing as a drop from that resistance, I would say the probabilities are increased that it actually holds as a breakout to the downside. And then you're just looking at kind of 108.50 as the round number at the lows, and then we're obviously in a different, maybe we hold the low, maybe we don't, but obviously that's still a decent move down. We're still looking at 200 pips from current levels. Mentioned the FTSE, so yeah, a bit of a we had this push about. So we held 7,500 pretty well, but it looks like 7,600 is now a bit of a point that we've been struggling with. Even you could say 7,550 is kind of an area that we've not really been able to, if you just look at where these highs were here, we've not really substantially, it was only the one day that we closed above it, and then we've just failed since then. So it's, yeah, 2 days, but obviously we gave up the day's gains. So looking a bit soft around 7,600, but again, it's an uptrend. And I think, and I mentioned this in last week's webinar, so I'm not going to say it every single time, but I just think we're on the cusp here of a, perhaps massive breakout in UK stocks. And even though obviously I understand all the logic around the Brexit uncertainty, I'm just looking at the price here and I'm seeing it surge above like 11-year highs or whatever it is, and I feel, to me, breakouts to new highs are positive. So if we get, if we do get a pullback down to some of these levels here, the 7,450s, even down here to the 7,400s, which again potentially we would get on a an upset in the election. I think probably an upset in the election would see a negative reaction in the FTSE, but obviously again I think that downside would be capped because it would probably coincide with some weakness in the pound, which is good for the multinationals in the FTSE, and just because of this longer term, the larger picture is where global stock markets are all breaking out to new highs. So talking to new highs, obviously we just came up there and tested it in the DAX on Friday. We're pulling back a bit now, but this to me, if I was, this candle to me is good. We obviously it was a big up day, so we pulled back from the high. That's natural enough. Any slot down to the 12,720 sort of area, that would be a break of the high and then a retest. We're still in a range, so that'd be risky, but I suspect we probably didn't even get down there. We're right in the 12,800s at the moment, if this round number holds and then we push up above the high again, that that to me would be looking pretty good. So you obviously get the theme from all these webinars really that I'm just generally quite still confident in stocks because I don't see any sign of a reversal yet. This was a nice setup in the Wall Street chart. Can't remember if we had this downsloping line on there last week. I think we did. So we got breakout above the highs here, not quite to the record highs, but a break above these three peaks right in the same sort of vicinity. We came back from the 21,100 level, pulled back right nicely to the 20-day moving average, and then shot off to the record highs. We've stalled around 21,200. But again, I think odds on is that we get up to 2,300 the next big level. And like I mentioned, the round numbers, just guys, I can't emphasize the importance of these round numbers enough. I know you hear so many analysts and things talking about, resistance is at 21,112. Guys, it's not at all. It's just the 21,100. That's where the big money is coming in and out of the market. Obviously, you get little pops above and below it. But those big round numbers are what counts. Yeah, I can definitely touch on the Nasdaq. Yeah, why not do that while I'm already new chart. Point to make about the Nasdaq, I suppose, is that it's almost one of the it's the best performing index. I mean, look at this chart this year since the election, actually. In itself, it almost poses some of the biggest risks to the market because it's become so concentrated in those top 5 tech stocks. The FANG stocks have just been doing so well that they are responsible for. I think last time I checked, it was something like those top 5 FANG stocks: Facebook, Apple, Amazon, Netflix, etc., Google. They were responsible for about 40% of the gains in the S&P 500. 500 companies, they're responsible for 40% of the gains this year. So obviously that's not a very good market breadth, they call it, in terms of there's not lots of companies contributing to a wide amount of gains. It's quite narrowly focused. So if they roll over, the market rolls over. And so that's probably going to happen at some point. Why would that happen? I don't really know. And I think a few people got it wrong, the initial play on the Trump tax bill, because at the moment some of those companies that are most highly taxed, though those shares are starting to underperform the US market at the moment, but the tech stocks are still performing. Well, why? Because they still have really good earnings and earnings expectations. But also, if Trump does deliver on the on a tax holiday, offering just a one-off chance to pay 10% on your foreign earnings, whatever the case is, those tech stocks have, particularly Apple, have so much money abroad. You've got to believe that a good chunk of that money is going to go towards shareholders. Obviously, this is not in any way an original idea, but I think it goes a long way to explain the gains we've already seen in these stocks. And it's why the Nasdaq's just absolutely off to the races. The moving averages I use, someone's asking here, is just I use simple. I just always have, and I think part of the logic is that they're the most commonly used. Similar with RSI, it's almost when you look on a Bloomberg terminal, they're the default indicators is are simple moving averages and a relative strength index. So I think that's part of my logic here, is it's just most commonly used. I think it doesn't really matter though. Ultimately, I think sometimes the EMA will get you into a trade that maybe the SMA would have missed you, and sometimes maybe the SMA is a bit slower. It'll keep you out of a trade that otherwise reverses. So I think it all probably adds up to the same thing in the end. And ultimately, I don't have a trading system based purely on the moving averages. They're just more of a kind of visual aid to help me determine the trend and maybe when the trend's stalling out. So I hope that was all right. Moving over to Brent, obviously, yeah. So this was a really nice level here. So obviously, it was it's the 49 round number, but it was also this rising trend line that we've had on the chart for a while. considering these two lows down here, this was a false break, and the trend line held nicely this time, as it was quite a nice confluence of the round number and the trend line. And so this is what I was talking about, is that initially the moves were higher today on this news from Qatar, but already the market's starting to roll over. So part of it may be just the Qatar thing doesn't really matter, so the market resuming its original trend, and partly, maybe what I was saying is that actually it kind of perhaps affects the OPEC agreement more than it affects supplies. So I've got this rising trend line in here. I think this is the last line of defense for oil. If this trend line gives way again and we get a close below it, I think there's I think we could be looking at 40 again in Brent crude, which would be quite crazy given that OPEC obviously just cut, but I think the market's just losing a bit of faith in OPEC, and there needs to be a bit of a shakeout before people get bullish again. We're not there yet, and obviously if the trend line holds again after that, this is actually a decent bullish pattern from Friday. So if we hold the low again, that'd be confirming the bullish pattern. So maybe there's an opportunity to the top side. Obviously the moving average is kind of telling you that there's basically no trend at the moment. It's just a kind of choppy-ish downtrend. But yeah, if anything, so you'd say that maybe if you're drawing a parallel line to this one, which I can actually drag this one across, you'd maybe draw it from the high over here through these lows, sort of takes you, actually not far away from where we are, to be quite honest. If you're drawing it through this low, obviously we're way down here, that would take us to around 45. So one way to judge it. It's a bit crude, but gives you a general idea where the direction of travel is. How are we doing for time? Oh, going slightly over today. We've had a few questions, that's all good. This is an interesting one. So we're in gold now. Scroll out to the weekly chart. Actually, it looks worse on this chart, but there's a fairly obvious downward sloping trend line coming through these highs. I think it actually does look better. Maybe if I just scroll out the daily chart, you can sort of see. Depends how you want to draw it. You could draw it through that that US election high there. I've just chosen to do it through this high, but we're right on there, and it's the 1280 level. So actually, a pretty good resistance to sell into. I don't think that would, I don't think that'd be a bad trade. But my sense is that we're probably going to break out to the top side. It's been a bit of a stuttering rise, but we've held the 20-day moving average pretty nicely. And despite all the despite the chatter of a June rate hike, etc., gold is still holding its own. UK election is a I don't know if you read my piece on the UK election. I think it probably would have a bearing on gold. So depending on how the price moves in the next couple of days, maybe maybe we do get a break up through this trend line. But maybe if the UK election all goes according to plan, less need for a haven. Maybe gold goes over again from that kind of 1290 mark. We want to watch for sure. Silver, this looks like a good level. It was the 50% retracement. There seemed to be some reactions going on there. It was also the 20-day moving average, but again, big sell-off, reversed, and then no surprise to see a big move to the top side. So the market's looking pretty positive in my mind at the moment, and I think the next opportunity for it to roll over would probably be up at this low here, which coincides around the sort of 1775 mark. But good chance we get up to 18, fits quite nicely with the 76.4 as well. So I think I'll probably leave it at that. I don't want to go too overboard here. I think I've covered most of the questions. Yeah, I mean, what is the approach I'm using here? It's certainly, you could call it trend following. There's different ways of trend following. Trend following is often breakouts, which I'll sort of do breakouts, but I tend to try and do it of breakouts of candle patterns near support for buying and near resistance for selling. So it's a sort of combination of swing trading and and just being very much aware of the direction of the trend. So you could certainly call it something along trend lining. But I guess part of what I'm trying to do here is just make you aware of the general context of what's going on in the market, and obviously for you guys as kind of short-term trading, just be aware of some of the bigger levels, the potential kind of larger dynamics, just kind of extra layer of information to fit around your particular trading style. So hopefully it achieves that. Brilliant. Thank you very much for attending, guys. Hope that was useful. Glad to have you here, and yeah, good luck trading this week. It's going to be a big one. Let's see what happens on Thursday on all those different fronts. The ECB, obviously, I know I didn't actually touch on that too much, but I think most of it's going to get eclipsed by the UK election. Let's see what happens Friday. Oh, I should mention, of course, I should be pitching myself that actually I could maybe be talking to you again, because we do have the special webinar on Wednesday, also at 12:30. So on that one, I think it's not fully put together at this point. Depends on how markets move in the next couple of days, but it's going to be slightly less charting orientated, a bit more discussion of some of the dynamics. Bit more slides, I think. So slightly more emphasis on the election that time around. So please tune in to then if you've got time. All right, cheers guys. Signing out.